In the US, Joe Biden is calling on regulators to tighten the rules for mid-sized banks. Silicon Valley Bank collapse has put Washington's focus back on regulation. The White House wants federal banking agencies alongside the Treasury Department to enact a series of changes. The question is, will they, and how fast can they apply? Hello, I'm Brooke Coles and welcome to the program. Let's break this all down a little bit further with Alexander Spellane, the CEO at Fisher Capital. Alexander, it's great to have your company. Firstly, how much damage has the collapse of SVB really caused?
Well, thanks for having me. The answer is it's really hard to gauge the damage that's been done to the SFB collapse. However, I think it does highlight some of the systemic problems in the banking sector. I think the major problem that people are running into is liquidity. So the majority of the funds that are held at banks are not necessarily readily available for withdrawal and are generally leveraged out or put into treasuries. So when people get worried and they want to pull funds out, it might lead to serious problems for any bank for that matter. And when we look at the FDIC insurance deposit limits, they only insure up to 250,000, and they might not even have that kind of cash to cover every depositor in the country. So I think that's the bigger concern.
So, Alex, is the fallout really as bad as market experts expected?
You might see a ripple effect, and consequently, SFB was the first one. You also saw First Republic, Signature Bank. It's really hard to gauge, again, how this can actually continue to play out, but I don't think it's over. I think that we, again, are a long way from understanding the full effects that we might see.
And we know that the White House, they're looking to really regulate this sector. So speaking on that, what type of regulations right now are being proposed by the White House? And I guess, how would they even help prevent another banking failure?
According to the White House, banks between 100 billion and 250 billion in assets should not, they should hold more liquid assets, increase their capital, and even submit to regular stress tests, write living wills, and detail how they can be wound down. So that's what I'm hearing from White House executives. And these are all actions that can be taken under existing law, according to them. So they're saying there's no need to really put congressional action in order, and authorize agencies to take these steps. So I think that what it comes down to is there's going to be some sort of reforms. And I think that the ultimate effect that's going to have is it's going to make it harder for smaller banks to prevail. And it ultimately empowers the larger banks to continue to step in and buy out these smaller banks when they run into trouble.
So in saying that then, do you think people have, I guess, lost faith in smaller banks?
I wouldn't say our clients have not. And I think that the problem goes deeper than just smaller banks. Actually, a lot of people that our firm speaks with have lost faith in the entire banking system as a whole. So not to mention trust in the dollar itself. I mean, if we look at the vast amounts of debt in the nation, it's close to $32 trillion. So it's understandable why a lot of people wouldn't feel comfortable leaving their entire savings in fiat currency.
And Alex, do you think there needs to be more coordinated global banking standards? We know the White House is trying to regulate the sector, but does it go beyond the US?
Yeah, I personally believe that the goal for the government is just to have a more coordinated global banking system and ultimately more control, which is why we do see a push to implement things like central bank digital currencies. That's a huge topic that a lot of our clients are very worried about. And I personally don't agree with any regulation that would give the government any more control over the way people choose to spend or save their own money.
And Alex, just before we wrap up, just interested to know what your advice would be to investors and people who I guess are on the fence about keeping their money in small and mid-sized banks amid all this.
That's a great question. My recommendation would be to diversify. The problem is it's not just savings in the bank. SFB, for instance, and First Republic, a lot of their, corporate sector and institutional investors go into primarily assets that are owned and controlled by the banks. So if you're in stocks, bonds, mutual funds, and that's all you have, I think that the risk is very similar when it comes to banks collapsing. So I think it's not a bad idea to have alternative assets outside the market, which is why what we do for our clients is we help them diversify into physical gold and silver our clients feel a lot more confident holding something in their hand, knowing that they're not necessarily coupled with the nation's debt and their currency is not attached to the central bank. So having any sort of assets that can help you prepare for those worst case scenarios, I think is a great way to get more defensive in this type of environment.
Certainly great advice, Alexander Spellane from the CEO of Fisher Capital. Always a pleasure. Thank you so much for bringing this advice amid all of this happening in the banking sector. No doubt we will catch up soon.
Absolutely. Have a wonderful day. Thanks for having me.
You're up to date. We have plenty more coming up right after this. Don't go anywhere. You're watching Ticker News.
You're watching Ticker News. More news is just minutes away.